Hey, this is Justin with DayTradeTheMarkets.com, and in the video today, I spend a lot of time on these videos. If you've watched many of them, and if you haven't, by the way, you can click the link below to see other videos, and there's probably 50 or 100 videos on there that you can look at. But I spend a lot of time just trying to help people understand what the software, the Day Trade the Markets software, is telling you, how to make sense of that. So that you can make better trading decisions. And a lot of times people will say, yeah, well, what about trade entry? Where do you get into the market? And so I thought I would talk a little bit about one of our trade entry ideas called the sweet spot trade today. It's one of my favorite trades. It doesn't happen all the time, but it's a nice trade when it does happen. But before I did that, I wanted to talk a little bit more broadly about the idea of trade entry and talk in terms of a subtle shift that seems to occur between traders that tend to not be successful versus traders that tend to be more successful. Okay, now let's look at the average trader, especially the beginning trader or the relatively inexperienced trader, and I think this is a process that we all have to go through on some level. When we start trading, we think there's some magic trade setup or some perfect trade idea or perfect software system, or who knows, but we think there's this way of there's this perfect entry idea out there, and as soon as we discover that, that's the answer. We all have to go through that, and while we're looking for that, we all end up losing. That's kind of a common story. I think almost any successful trader would tell you that, and I think it comes down to a difference in how you go about looking for trade entries. Most traders, and most traders are losing traders, but most traders are focused on their trade entry. They're focused on trade setup rules. Okay, so in other words, if A and then B and then C happens, if I get a crossover on this and then I get this indicator and this indicator, if I get all these things, that's a trade setup, and that's what I'm going to take. Okay, so it's kind of robotic, kind of systematic, and that's the idea. And what ends up happening is, if you take that trade setup and the trade setup that you took happened to be in line with the condition of the market, great, you had a winning trade. But if not, you didn't. And then you come back, well, what happened? Why did this trade work and why didn't that trade work? And the difference is in the understanding of what's going on a deeper level within the market, or in other words, the ability to put the market in context. And so that's what we really focus on day in and day out in our teaching, and how we try to teach people to use this software tool, is that number one, you try to make sense of what the market's doing. Try to put the market in context. In other words, use tools like the aggression bars and the filter and support resistance zones to try to understand, are the buyers in control or are the sellers in control, or are neither in control? Because that's good information too. Are we in more of a trend or breakout vertical type of a situation, or are we more in a consolidation horizontal type of a phase? Because when you know that information, if you're in a vertical or trending type of a situation, you want to apply momentum based trades, trend pullback type trades, versus if you're in a horizontal or consolidation type of a phase. If you can first define that, then you obviously want to be more of a reversal trader, a fade trader, where you're buying lower extremes of consolidation and selling the upper extremes of consolidation. Okay, so hopefully that makes sense on some level, but this is a subtle shift in the ability to kind of turn this on its head from what most people do. Most people, again, look for a trade setup according to rule A, B, and C, and then kind of are at the mercy of the market. If, however, you can learn to first put the market into context, first try to make sense of what the market's doing, then you have a strong leg. Because once you have a strong leg up, once you have a sense of what the market's doing, then and only then do you focus in on finding a low entry trade entry idea. So that's our focus. Number one, put the market in context. Which side do we want to be on, or do we not want to be on any side? Okay, once we know which side we want to be on, then let's utilize one of the trade setups that we teach, or one that you come up with on your own, to get into a low risk, a trade. When I say low risk, I mean a trade where you don't have to risk much money to know if you're wrong. You're not always going to be right, but when you're wrong, you want to know pretty quickly if you're wrong. You don't want to have to risk much. So a good trade location, but first, let's focus on making sense of the market. Okay, so hopefully that makes sense on some level. So now, with that said, we have about 7 or 8 different trade entry ideas that we talk about. But again, first, market in context, then look to get into one of these trades. And obviously people come up with their own trades, or they already have a method that they use, and they use our software to help make better decisions as to whether they should take one of their setups or not. Hopefully that makes sense. So let's have a look at the E-mini S&P from today, and this is a 2-minute chart. Same logic would apply on any time frame. This happens to be a 2-minute chart. Now, going into the day, we're in a pretty strong up bias, bigger picture. So all things equal, we would rather be on the long side. We want to wait for things to line up. But you can see that early on, the first major aggression bar was this level 2 or strong selling aggression bar. We had some follow through. Here was another one with follow through. Here's a level 3 bar. So early on, sellers are in control. Now, that's in the context of a bigger picture up auction, but sellers are in control of this market at first. Okay, they're still in here, and it's not until the high of this bar is taken out, and it happens to occur on this with these level 3 buying aggression bars. The filter's turned over, but at this point, our bigger picture bias is up. We're starting to finally see some buying aggression come into the market with this extreme buying aggression bar here, this one, and it's followed right next to it with another extreme buying aggression bar. Again, our filter is green, our short-term filter is green, our bigger picture bias is up. Yeah, granted, we're kind of into this potential resistance zone, but all in all, we've taken out this early major selling structure, and now we're finally getting some major buying that's coming into the market. So with that said, it's not perfect, but we have more. We know that we would like to be on the long side heading into the day. We're finally getting some bullish evidence to come into the market. So now, once we have that context in place, and again, the filter matches up with our bigger picture bias, we're starting to see some buying context, some buying aggression. Now we want to say, how can we get into the market? Now there's a few ways. When we look at these, when this first level 3 selling bar comes in, you could look to get in with at the low of this bar with what we call the level 3 retracement trade. However, when there's a second one right in a row, and it doesn't happen very often, but 2 of these right in a row, if you look at the area where they overlap, and you can see they overlap right here, the 2 of them, that is what we call the sweet spot trade, and that's a pretty good area, a pretty good entry location to be getting long. Would you just take any time that a sweet spot trade came in? Would you take it? No. You would want to make sure that you have a pretty good handle that buyers are in control of the market, or that you'd rather be on the long side than the short side. And that's what we had going into today. And then as you can see with the filter, it finally turned over. The selling bars started to get taken out, and we finally started to get some buying bars that came in. Once we had that evidence in place, that context, then we look for a trade. And this sweet spot trade is the same idea. Okay, we had the same thing happen on the gold today in going through the charts. So heading into the day, gold's been rallying for the past week or so. So we're looking to be on the long side. Early on in the day, filter goes to strongly bullish. We have our only structure from the day is this level 2 bar that gets taken out. And then here is a level 3 bar, a high velocity move as well, and another level 3 bar right in a row. So heading into the day, we'd rather be long. The filter's dark green. Our first structure was won by the bulls. And then we have this extreme buying aggression bar that came in. So at this point, we're thinking, okay, we'd rather be on the long side, which was our plan going in. How can we do it? Well, one of those ways is the sweet spot trade. You can see right here where these 2 level 3 bars in a row overlap. We know that's a pretty good location to be getting long. So you could just place a limit order somewhere in there. Here's a situation where this bar decelerated. In other words, it was a selling bar. Its low took out the prior bar's low, but the level of selling aggression within that bar decelerated or slowed down. Pretty good indication of turning point if you have other evidence. So again, that's kind of the sweet spot idea. Here's another case. We bust through this caution zone right here. We're still in a green filter. Here's a level 3 bar followed by one right in a row. Where do those 2 bars overlap? Right here. They overlap by a tick or so. You can see the market tested down right to that level. Again, not the greatest trade in the world, but it's a sweet spot idea. And there's obviously, we have 7 or 8 other good ideas. Here's just a simple, confluence type of an idea where, you have a bigger picture up bias, filters dark green. You're looking to buy toward these support zones. Here's the support zone. Here's the support zone. Again. So there's a lot of different ways you can get into the market, and I think people tend to get fixated on different trade setups. But again, going back to kind of what I feel to be the bigger picture, the more important part is, how do you look at trades? Do you look at them just as a set of rules? If so, that's tough, at least in my opinion. You can have rules. Don't misunderstand me. I think it's important to have some kind of a framework in terms of the ways that you like to get into the market. You don't want to just be flying from the seat of your pants. You want to have some trade setup rules, and we have a lot of different entry ideas based on market conditions. Fade trades, go with type trades, momentum type trades, pullback type trades, reversal type trades. But again, you don't just want to blindly take those. You want to first be able to put the market in context. And I think if you study any successful trader or talk to any successful successful trader that you know, that's probably how they do it. Nothing's 100% obviously, but that's probably the way they do it, where they're first trying to make sense of what's going on. What am I seeing? What's the market telling me? What's the evidence telling me? And that's what we try to focus on every day. Once you have that information, you have an edge. Then you're looking for a low risk way to get in. Okay, that's the idea. That's the point I'm trying to make on this video. Hopefully that's helpful. If that didn't make sense for any reason, by all means, send us an email, info@DayTradeTheMarkets.com, and we'll try to clarify. Also, if you're interested, I'm considering putting together a webinar and looking at some of these various trade setups that we have. If you'd be interested in that, by all means, let us know, and we can put that together as well. All right, talk to you soon. Let us know if you have any questions. Thanks.